Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at Learn Price Action Trading. Let's take a look at what the indices have been doing and are likely to do in this coming week. On the monthly chart, all base candles, so which means the fight is going on between buyers and sellers. So volatility will be on the rise. The next demand zone is pretty far away, so you've got to be careful with your long positions in the index. It will be a good idea to remain stock specific. So that's a demand area, and that's quite a bit of fall. That there's no supply as of now on the monthly chart. Coming to the weekly chart, that's the area from where markets fell with a gap down a few weeks back. We retraced back, went up, punched a new high, and then got rejected. And today again, prices are coming down. So the next area of demand zone where prices are likely to move if they continue their downward momentum is going to be at least 22,000 to 21,800. That's the area on the weekly chart. So very narrow range, but the fall could be pretty fast. And if you break this, the next area will be all the way here. So that's going to be the range for the weekly. Coming to the daily chart, so a pretty compressive price action move. That's the area of supply with slight decoy that happened. That's the area of supply zone from where we had a very sharp fall on Friday, and today sort of continuation. We gapped up a little bit inside Friday's range, but got sold off. So this is going to be a crucial area of price. Once we break this area, we could easily move towards all these areas of demand zone. So that's the area that is in play on the daily chart. So that's going to be your range for Nifty on the daily chart, right, from 22,800 to 21,900. If we happen to breach this, that is going to be your next area of demand on the daily chart. So a little bit bearish outlook. Stay away from longs in the indices. You can get into option spreads because volatility is pretty high. Market could remain range bound for a couple of days before it starts moving down, and 22,300 will be a key area to watch. On a smaller time frame, that's the area from where we fell. Initially, we retraced back, punched up, and again started coming down. So if prices move up, we could go a little bit deeper inside. And for your short-term trades, that could be your target. Number one, and this could be the area from where we could see a bounce. But if we break this, that could just push it to a new supply zone that gets created, and price could move towards again 21,900. So if you want to go to a smaller time frame, that's the area of supply zone, which is right now going to be in play. So that's going to be a range. If we come up here tomorrow, a good intraday short can be taken here for at least a target of, let's say, 22,400. So a little bit bearish bias, avoid aggressive longs in the index. India VIX, after having a big fall. So after having a big fall a few weeks back, India VIX has suddenly shot up, which was expected, and could move up further towards, let's say, 18 to 20 areas. On the monthly chart, we have breached that area of supply zone. The next supply is around 19 to 20. Similarly, on the weekly chart, that's the area where we could move towards between 18 to 19 and a half. So VIX is high, volatility is going to be increasing. So be cautious. You could see wild swings happening in the markets. Let's take a quick look at Bank Nifty. On the monthly chart, again, a nice compressive move. The trend is still strong and up. Prices came down and moved up, gave a new high. That's the area of demand zone right now on the monthly chart, which is the demand zone in play. There are smaller time frame demand zones in these areas, but on the monthly trend is up. And if we pull back, we could easily pull back towards, let's say, 43,000, 44,000 based on the monthly chart, but it could take a couple of months maybe for the indices to fall. A quick look at the weekly chart. Again, nice compressive price action. That's the main area of demand zone where new longs could be taken for swing. There is no supply zone as such, but we have a very strong price rejection on the weekly that happened last week, and today we opened up and got sold off. Prices could move if they continue to fall down. They could move towards, let's say, 46,200 to 46,800. That's the area where it could uh, fall on the weekly chart. On the daily, again, the trend is still intact and up, but no clear demand zones all the way here. The next areas of demand zone that you can see is all the way at 46,950, 47,000. So based on the daily chart, that's the area where prices are likely to come. But again, it may or may not come in one single straight line or continuous days of fall. It could be more like a lower lows and lower highs pattern that it may form. Smaller time frames will have some demand zones which could push it, and that is going to be a crucial picture of supply. It's not yet does not have any achievement yet, and this is going to be your key areas to watch out for. So if we come again around 449 400 to 49 700, that will be a good area to short for a first target of 400 and a second target of 47 800. So slightly bearish bias, longs only on confirmation and shorts on pullback. Taking a quick look at the smaller time frame, intraday time frame on 75-minute chart. So if you see prices went up and fell, breaking all these areas of demand zone. So this is the area where we are likely to move if the fall continues tomorrow, let's say, and the next area of demand zone will be at around 47 700. So that's going to be your range. If you look at the smaller time frame, maybe this area of supply zone could be a good area for some intraday trade setups for a target of this. Or maybe since this has already reached, it could further continue lower till 48,400. And at the extreme, we have one more area of supply zone. But that's a little bit far. The supply might still hold and push prices down. So cautious approach, avoid aggressive longs, and on pullbacks can look for some shorting opportunities.